A few misses here as well, and that is hitting the stock by more than 5% in the after hours. Uber's revenue coming in better than expected, $4.8 billion versus the $4.4 expected. EPS loss, though, a loss of $1.28 per share. And this is mostly due to a more than $3 billion write-down on its DiDi stake. The street expecting a loss of 33 cents per share. So that's a big miss, but doesn't seem to take into account that DiDi loss, which should have been obvious. Adjusted EBITDA, this is important. That was actually positive for the first time in the company's history, coming in at quite narrow $8 million. A loss was expected. And also the Q4 range, the company is saying that it's expecting adjusted EBITDA to come in between 25 million and 75 million in the current quarter. Gross bookings, this is a miss, and this is key also, which is probably hitting the stock, coming in at $23.1 billion, a narrow miss. 23.3 was expected. In terms of supply, driver supply is very key for this company, saying that U.S. mobility drivers, so ride-sharing drivers in Q3, were up nearly 60% year over year. And that compares to what Lyft said earlier this week, that they saw a driver increase of 45% year over year in the third quarter. Notably, though, in this release, we don't have any commentary. Dara Khosrowshahi doesn't say whether they'll be able to pare back incentives, those investments that they've been making in terms of driver supply. So we'll be listening out for that on the call, and that's probably pretty critical for where the stock goes from here. Back to you.
Does that commentary normally come on the call or in the release?